IBM's decision to close its research and development R&D operations in China marks a significant shift in the company's global strategy, driven by mounting geopolitical tensions and a challenging business environment in the region. The move, announced in August 2024, involves shutting down research labs in key Chinese cities, including Beijing, Shanghai, and Dalian, leading to over 1,000 job cuts.
Firstly, thank you for watching, and don't forget to smash that like, subscribe, and notification bell for more global finance uncovered, as we continue to work hard and around the clock to always deliver and improve on our content for you. We would greatly appreciate your additional support by you clicking the like button, notification bell, and subscribe button and joining our channel's growth.
This decision reflects broader challenges faced by U.S. tech companies operating in China, where increased regulatory scrutiny and growing nationalist sentiments are impacting foreign businesses. The closure of IBM's R&D labs in China is part of a broader trend of U.S. companies scaling back their presence in the country. The company has cited several reasons for this decision, including declining revenues in China, which saw a nearly 20% drop in 2023, and intensified competition from local firms like Huawei. This competitive pressure has been exacerbated by Beijing's efforts to promote domestic technology under campaigns that have been informally dubbed Delete America. In response to these challenges, IBM is expected to shift some of its operations to other parts of Asia, particularly India. Reports suggest that the company is likely to enhance its presence in cities like Bengaluru, where it already has significant operations. This move aligns with IBM's strategy to adapt its global footprint in response to market conditions, focusing on regions where it sees greater growth potential and fewer regulatory hurdles. IBM's exit from China is not entirely surprising given the broader context of deteriorating U.S.-China relations. The technology sector, in particular, has been caught in the crossfire of trade wars, sanctions, and export controls, with both countries imposing restrictions on each other's tech companies. IBM, like many other U.S. firms, has had to navigate these complexities while trying to maintain a foothold in one of the world's largest markets. The company's decision also underscores the shifting landscape of global tech innovation. While China was once a hub for R&D for many multinational companies, the current environment has made it increasingly difficult for foreign firms to operate. This has led to a reevaluation of where companies like IBM invest in research, with a growing focus on markets that offer more stability and fewer geopolitical risks. IBM's strategy in China had long centered on helping local firms develop hybrid cloud and AI solutions. However, as the regulatory environment became more challenging, the company found it increasingly difficult to justify its R&D investments in the country. The closure of the labs is a clear signal that IBM is recalibrating its approach to innovation, looking to other regions to drive its next wave of technological advancements. The impact of IBM's departure from China will likely be felt across the tech industry, as other companies may follow suit if conditions do not improve. The loss of IBM's R&D operations could also slow the pace of innovation in certain sectors within China, particularly in areas where the company was heavily involved, such as AI and cloud computing. This could have broader implications for China's tech ambitions, especially as it seeks to become a global leader in these fields. For employees affected by the closures, the news is undoubtedly a significant blow. Many of those losing their jobs were involved in high-level research and innovation, and their expertise will be difficult to replace. However, IBM has indicated that it will continue to support its clients in China through other means, although details on how this will be achieved remain sparse. This move also highlights the growing importance of India and other Asian countries as alternative hubs for tech R&D. As IBM and other companies expand their presence in these markets, we can expect to see a shift in where the next generation of tech innovations originates. This could have long-term implications for the global tech landscape, potentially diminishing China's role as a central player. IBM's decision to leave China is a reflection of the increasingly difficult operating environment for U.S. tech firms in the region. While it represents a loss for China's R&D capabilities, it also opens up opportunities for other regions to become new centers of innovation. As the geopolitical landscape continues to evolve, companies like IBM will need to remain agile, adapting their strategies to navigate these complex challenges successfully. IBM's withdrawal from China is a strategic decision that mirrors a growing trend among Western technology firms. The escalating U.S.-China trade tensions have created an increasingly hostile environment for American companies, compelling them to reconsider their investments in the region. IBM's exit is part of a broader pattern where companies are diversifying their global operations to mitigate risks associated with operating in China. The challenges include not only the regulatory pressures from both the Chinese and U.S. governments, but also the broader geopolitical risks that have made China a less attractive destination for foreign capital and expertise. This strategic retreat by IBM also reflects the broader economic decoupling between the U.S. and China, which has accelerated in recent years. As the U.S. government imposes more restrictions on technology exports to China, companies like IBM are forced to realign their global strategies. This decoupling is pushing Western firms to reduce their dependency on China and seek alternative markets where the regulatory environment is more favorable. India, with its burgeoning tech sector and a more predictable business climate, is emerging as a key beneficiary of this shift. The decision to close the R&D labs also raises questions about the future of innovation in China. For years, China has been a hub for technological research, attracting global companies due to its vast market and skilled workforce. However, the current environment is pushing these companies to reconsider their investments. IBM's exit could signal a broader trend where global tech innovation begins to shift away from China towards regions like Southeast Asia and India, where there is growing investment in technology infrastructure. From a business perspective, IBM's exit is also a reflection of the changing dynamics in the Chinese market. The Chinese government's push to reduce dependency on foreign technology has led to increased competition from domestic firms. Companies like Huawei are becoming increasingly dominant, making it difficult for foreign firms to maintain their market share. IBM's shrinking revenue in China is indicative of this trend, where local companies are being favored over foreign entities, particularly in strategic sectors such as AI and cloud computing. The timing of IBM's departure is also noteworthy, coming at a time when China is facing significant economic challenges. The country's economic slowdown has been exacerbated by regulatory crackdowns on various sectors, from technology to education. For companies like IBM, the combination of a shrinking market and increasing regulatory risks makes it difficult to justify continued investment. This has led to a reassessment of their global strategies, with a focus on markets that offer better growth prospects and fewer regulatory obstacles. Moreover, the impact of IBM's exit is likely to be felt beyond just the loss of jobs. The closure of the R&D labs in China will likely have ripple effects across the broader tech ecosystem in the country. These labs were not only centers of innovation, but also critical to IBM's strategy of developing tailored solutions for the Chinese market. Their closure may hinder the company's ability to serve its clients in China effectively, forcing it to rely more on its operations in other regions. IBM's decision also highlights the growing importance of digital sovereignty, a concept that has gained traction in China. The Chinese government has been increasingly focused on building its own technological capabilities to reduce reliance on foreign firms. This push for self-sufficiency in critical technologies is a key factor behind the challenging environment for foreign tech companies. As China accelerates its efforts to develop domestic alternatives to foreign technology, companies like IBM find themselves increasingly marginalized. The broader implications of IBM's exit from China also touch on the global tech supply chain. With China being a major hub for tech manufacturing and R&D, any significant shift away from the country could disrupt the global supply chain. As companies like IBM move operations to other regions, there could be a reconfiguration of the global tech ecosystem, with new hubs emerging in places like India, Southeast Asia, and even parts of Africa. This shift could have far-reaching consequences for global technology production and innovation. Furthermore, the decision to leave China is a testament to the complex and often fraught nature of doing business in the country. Over the years, many foreign companies have faced challenges in navigating the Chinese regulatory environment, which can be unpredictable and often unfriendly to foreign firms. IBM's exit serves as a reminder that despite the allure of the Chinese market, the risks of operating in the country are significant, particularly for companies in strategic sectors like technology. In conclusion, IBM's departure from China is a significant development that underscores the broader challenges faced by foreign tech firms in the country. It reflects the growing geopolitical and economic pressures that are reshaping the global business landscape. As the US-China decoupling continues, we can expect to see more companies re-evaluating their strategies and potentially following IBM's lead in reducing their presence in China. This shift will likely have profound implications for the future of global technology innovation and the distribution of tech talent and resources around the world.
Thank you for watching, and don't forget to smash that subscribe, like, and notification bell for more global finance uncovered.